Welcome back, investors, to Ticker Time News. I'm Adam, and Twitter's time as a public company ends in the acquisition by Elon Musk. You know, when Elon Musk made an offer to acquire Twitter, ticker symbol TWTR, for $54.20 a share about 10 days ago, there was little confidence that the company would agree to deal with the Tesla, SpaceX, Neuralink, and the Boring Company CEO. In fact, shares of Twitter closed marginally lower on April the 14th, settling 17% below Elon Musk's bid at $45.08 a share. Today, however, that skepticism has turned into reality after Twitter confirmed an agreement to be acquired by an entity wholly owned by Elon Musk, confirming a report from the Wall Street Journal earlier today. Elon Musk tweeted this afternoon about Twitter accepting his offer, saying, quote, "Free speech is the bedrock of a functioning democracy, and Twitter is the digital town square where matters vital to the future of humanity are debated." He continued, "I also want to make Twitter better than ever by enhancing the product with new features, making the algorithms open source to increase trust, defeating those spam bots, and authenticating all humans. Twitter has tremendous potential, and I look forward to working with the company and the community of users to unlock it," end quote. While shares of Twitter were exhibiting notable relative strength throughout the day on these developments, the stock still wrapped up trading 5 to 6% below the offer price. This indicated there was still a healthy amount of doubt that the deal would ultimately get hammered out, despite all the optimistic reports. Beyond the reluctance of Twitter's board to hand control to Elon Musk over political or ideological reasons, some still believe that the offer price also stood in the way of the deal. Less than a year ago, Twitter was trading over $70 a share, making the bid seem a bit underwhelming by some. But the reality is that Twitter had been trending down since October of 21, and there were no signs of that trend changing direction. And ultimately, the board had to face that reality, that Elon Musk's bid was the best possible outcome. Elon Musk didn't buckle on his promise either, that $54.20 a share represented his, quote, best and final offer. But Twitter's surprising about-face on negotiating with Elon Musk comes just 1 week after implementing the, quote, poison pill, intended to block Elon from building a larger stake. Also called a shareholder rights plan, the action is meant to dilute the stake of the acquirer by prompting an option for other investors to purchase shares at a discount. But this dilutes everyone's shares. That's why it gets the name poison pill, because nobody likes to swallow it. In this case, shareholders would gain the right to buy Twitter shares at roughly a 50% discount if Elon Musk's holding increases to 15% or more of Twitter shares. So, the obvious question then is, what motivated Twitter to reconsider its hardline stance? Well, there are 2 probable explanations that are very similar to each other, and both of them involve pressure. Twitter's apparently under pressure from some shareholders to accept the offer after Elon Musk secured financing to complete the acquisition. One such firm that's reportedly backing Elon Musk is Morgan Stanley, ticker symbol MS, one of the largest shareholders in Twitter. If a significant portion of Twitter's share base believes that the board is not working in their best interest of the shareholder, then that could invite selling pressure or, worse, even lawsuits. Likewise, Elon Musk has threatened to sell his stake if Twitter doesn't accept his offer, putting potential downward pressure on the stock again. But nevertheless, Elon Musk will take over Twitter. As Twitter said, the transaction was unanimously approved by its board of directors and is expected to close in 2022, pending regulatory sign-off and the approval of shareholders, of course. So, my final thought is that this drama has come to a close in a surprising way. Last week, it seemed quite improbable that Twitter would ever come to an agreement with Elon Musk. It certainly will be fascinating to see how Twitter evolves under Elon Musk's leadership. Although Tesla shareholders may not be so enthusiastic about the idea, as concerns about Elon Musk's focus on the EV maker are bound to intensify. But if there's any CEO in the world that could manage multiple companies, it's arguably Elon Musk. Now, on Thursday, April 28th, Twitter reports earnings, and although it's been reported that Twitter will not hold an earnings call, we should hear more details about the deal as time moves on. So, do you see this as a win for free speech or something else? Let me know in the comments below, as your comments really do help us all to better understand Twitter. Help us out by smashing that like button, sharing this video wherever you can, and click the first link in the description to beat the market with us. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.